Good morning. I'm so excited to see all of your faces here this morning. My name is Christina Larsen, and I am the Family Services Manager at Habitat for Humanity of Washington County. We've partnered together with Partners for Better Housing, NWTI, Bancorpsouth, WACO Title, and First National Bank of NWA to provide our community with training throughout this year. So each month there's going to be a new training, and this is the beginning of that series. And so we're just so excited that you took time to come out on a cold Saturday morning to spend time with us and to learn. So I'm going to just kind of briefly introduce the people who've kind of brought this together. We have Gretchen Sawyer, who is the Director of Communications with NWTI. We have Dixie Cosper, who is the Community Development Lender for Bancorpsouth. We have Katey Scott, who is the Business Development for Benton County. We have Carmen Anderson, who is a realtor with EXP Realty. We have Melony Belt, who is the business development person for Washington County. And then we have Regina Shadowens.
Nobody ever gets that.
Awesome. Who is our insurance agent. So today you're going to hear from an insurance agent, a realtor, a lender, and a WACO professional. So we're very excited to have you here. Those of you who indicated on your registration form that you were interested in Habitat home ownership, we have flyers back there that you're more than welcome to take. I will be in contact with you probably in March to set up times for orientations for that. So I will have Gretchen come and talk a little bit about the programs that NWTI does here.
Okay, I'm Gretchen Sawyer. I'm over communications here at NWTI. Can y'all just let me know, how many people knew NWTI was here? Okay, yeah, about what I expected. So we are working on, it's my job to make everybody aware of our school, and we do lots and lots of different programs from high school through college type classes and community education classes. So just about anything that you could want, we probably teach it. So if you have any questions about our school, if you have a child at home that needs to get involved in something and they don't know what they want to do, we have career coaches, anything that we can answer for you. Feel free to contact me. And let's see. I'm sorry, Christina, who is next? Oh.
Sorry, I forgot to introduce our other partner, Tenisha Gist. She is our Stewardship Manager from Partners for Better Housing, and she'll give a brief snippet at the end of our speak today. Thank you.
I didn't wear the right thing to be able to clip something onto. Did all of y'all pick up one of these when you came in? Let's get everyone one of these. Can you do that? Thank you so much. So I'm with WACO Title, and we issue titles for when you buy a property. How many people know what a title does? Title insurance does. I did not know about it either until I started working for WACO Title. So how's that? So I mean, it's not something you're really gonna, most people know about, but we're gonna teach you about that so that you know what it is when you're purchasing a home, what it is that you're getting. But all right, so if you're here today, I'm assuming it's because you're interested in buying a home for the first time. Is that what everyone is here for? Does anyone already own a home? All right, so we're all kind of new in this together. Fantastic. So one of the things you need to do, I guess really, basic things before you buy a house is determine your financial readiness. And that's, you got to figure out how much money you have a month and what percent of that budget that you want to go towards a home, or what you need to do on a car payment or utilities, or all of that. I mean, it's a true financial issue that you've got to make sure. Duh. I'm sitting here like saying the obvious, I guess. The next step is determining your financial readiness, or how your credit score is. I don't know if y'all know this, but once a year you can look up your financial score for free. And you can get it from all 3 credit agencies. And if you don't know about this, go to www.ftc.gov. It's ftc.gov. It's free. You get all 3 of the different credit agencies. And it's a great way, if you don't know what your credit score is, I mean, it's not something a lot of us really know. It's a great way to see what it is and determine, okay, maybe I need to wait just a little bit and get my credit score up, because your mortgage rate depends on what your credit score is. So the higher your credit score, the lower your interest rate will be, and that's optimal, of course, as well. So another thing that you can do is get a pre-approval letter. So you can go to the mortgage banker, to the bank, and get pre-approved for a mortgage, and that way, like, you can walk into a house and like what you can afford, like what they'll give you for a mortgage and all of that. So, that's just pretty good to know what you're going to be approved for, because you can hope that you're going to be pre-approved for this certain one, but if you're not, then you don't want to get heartbroken that you can't get that house. And then the next one was just kind of determining your budget, like what I was saying about what all your various bills are, just really think through that. And, all those little things that creep up, like property insurance, just all the utilities that, like, if you're living in an apartment, that some of those may pay, but then you have to pay those all yourself when you're in a house. So, just some various things to think through. And various people can, friends, or we're happy to help you guys figure that out, whatever. So anyway, all right, I'm going to let Melony Belt come back up, and she's going to go through some more of these. And then I'm just kind of skimming through these, and we're going to go through most of these in detail.
Hey, I'm Melony Belt with WACO Title. How are y'all this morning? Everybody awake? Come on, we can do it. It's a little chilly. When you get this far in the process and you kind of know what you're approved for, you start tending to kind of go online and look for things. And sometimes you think, well, if I'm approved for 200, surely I can get 250. So between the lender at the bank and your realtor, hopefully they'll reel you back in, because you don't want to ever be house poor, right? So I want to talk this morning just for a minute. I want to introduce Carmen about finding your person. A real estate agent is your greatest friend during the transaction, because if you've never bought a home before, you have literally no idea what you're doing. You are depending on your lender who's loaning you the money and your realtor to guide you. The realtor's job is to protect your hiney, protect your money, protect your interest. So it is very important that you just don't call willy-nilly and talk to every real estate agent in the market. In Northwest Arkansas, we have 3,500 realtors. It's important that you get with a realtor who's actively working, knows the market, and will help you and has time to help you. You don't want a realtor who works only on Friday, Saturday, and Sunday and has a full-time job the rest of the week, right? You want someone who's dedicated to helping you get through this transaction and negotiate. So when I was thinking about who I wanted to invite this morning to hang with us, I thought about Carmen. Carmen is fantastic. She cares about her clients. She listens to their needs, and she can help pair you. So please welcome Carmen Anderson with EXP.
Thank you. So I guess everybody can hear me okay, right? So I'm glad to be here this morning and meet all of you and see all of you. I think what y'all are doing here is a very great step, coming to a class and learning more about what to do. So again, I'm Carmen Anderson with eXp Realty. I work and service all of Northwest Arkansas. So from like Bella Vista down to West Fork, and then from like Siloam Springs over to east side of Springdale, sometimes even into the Huntsville and Eureka Springs area. So I cover a big, wide ground of properties. I am a native also to Northwest Arkansas, so I know the area very well. I know a lot, the areas, you know, certain housing, pricing, just land opportunities, like all kinds of information, and not just real estate. I help my clients, you know, if they're looking for a place to go and do things, I give them information just because I know the area so well, and I know tons of people. Almost all my family lives here in Northwest Arkansas. So I just wanted to share why I became a realtor to begin with. And real estate is a huge passion of mine. I just really love real estate a lot. And but another reason is, like a few years ago, I was in the same boat that y'all are in, looking to buy my first home. And, you know, I didn't understand the process. I didn't learn as I went through the process. My lender didn't help me. My realtor didn't help me. No one explained anything to me. I was just told, sign here, see you tomorrow, see you in 2 weeks. That was it. So I knew that I could do a better job than all of my previous realtors. And besides the fact that it's my passion, I really wanted just to make that my career. So that's why I did that. Another thing is I love working with first-time home buyers, and that's one reason I was so excited to come today. I love to educate, and I love to explain the steps of the process, and so you guys would know what to expect as we go along through the process. And I really just break it down step by step, and then as we go through the process, I explain what's coming next. And so you have a full understanding, and you learn as we go along. So just to help you, and Melony mentioned this, to help you through the home buying process, you do need a realtor, because there's just a lot of pieces to the process. And one thing I just wanted to mention today, as far as being a buyer, you do not pay the realtor for their services. The seller pays the realtor's fees and commissions. So as a buyer, you're basically getting a service for free. That's a very huge misconception in most cases. Every buyer that I run into thinks that they're going to have to pay me fees and commissions, and that's not necessarily the case. So one of my jobs is to help you through this home buying process, which can be stressful, but I really like to make a very smooth and very unstressful transaction for my clients. And it's my job to help you find the right home at the right price. Yes, ma'am. You have a question?
Yep, I do.
Okay.
I'm not trying to put you on the spot,
Yeah.
but in this market, it is the case that there are some sellers that are refusing to pay the real estate commission.
Yes.
And so how do you handle that?
Well, how that breaks down is, well, first of all, that's pretty rare at this point. I haven't had that happen to me yet, or anyone on my team. So we, you know, that being the case, usually we always sign a buyer's agency agreement with our clients as buyers. If something like that were to happen, it would be up to the buyer at that point to pay that commission. But like I said, it's very rare. It does happen every once in a while, but like I said, it hasn't happened to us. Basically, if that was to happen and you couldn't afford it, we'd have to move on to look to find another home. So is that?
My mom.
Okay.
My mom moved here.
Okay.
And
Wow.
it happened 3 times. So,
Okay.
yeah.
And you know, I always try to go back to that seller, and I work to negotiate as well on your behalf as my client. But you know, in the end, they have the final say as far as what they will or will not do. Does that answer your question? Okay. You're welcome. So I just wanted to share also that I have some secret strategies to help my clients win in multiple offer situations that other agents don't use. So here's some just examples. Just last night, I wrote an offer for a client on a house that's not even listed yet in this market. And similarly, 2 weeks ago, I was able to get a home under contract for a client that the home had not been listed yet, again, in this market. And recently, we were able to help a client get a new roof and a new HVAC unit on a home that they were under contract on. And again, that's in this market, which is very unheard of. You just don't hear of things like this happening in this market. But I'm still working hard to get it done for my clients. I help my clients win, and I'm here to help you guys. And you just let me know if you have any questions and reach out to me when you're ready to enter the home buying process. I'd love to help you, and I look forward to working with each of you. Y'all have a great afternoon.
So we're going to go over, this is just a general overview of the home buying process. And then we're going to have Dixie, who's our lender, come up and talk with you guys about that lending process. So once you find your realtor person and you know you get along and you trust each other, then it's the big choice, selecting a property. You've got your lender in place, you've got your realtor in place. Now you're going to go out and hope that you can be first when they put the sign in the yard. Or if you get with Carmen, maybe you'll not even have to put the sign in the yard and she can get one that's still for sale by owner. The hardest part of this is when you fall in love with a house, then determining what kind of offer you want to make. This is when you really lean into the realtor, because the realtor will have experience, hopefully, in that area. She'll be able to look up comps. He or she will be able to look up comparable sales that are in that area to help you determine. It is really hard in this market to determine how much a house will sell for when people are offering cash over and above the value of the home. Rest assured, I've always said this, what's supposed to be yours will be yours. And your time will come and you'll get paired with the right house that you're supposed to be with. I really believe that that's true. I know it can be heartbreaking when people think they have to have the house with the big patio, but there'll always be another one. There's lots of houses in Northwest Arkansas to choose from. Making an offer is just a really delicate process, and price is not the only factor. You can sometimes negotiate closing costs. Sometimes repairs are necessary. For instance, some lenders definitely will not give you money to buy a home where the roof is not performing as it should be, right? So sometimes you have to get a new roof, or sometimes there's a leak under the sink and they're not going to pass it. Depends on what kind of loan you get. You will want to hire an inspector before the home closes to inspect the home. An inspector doesn't come through and nitpick every little thing. His job, his or her job, is to come through the home and make good decisions about the home's mechanical working parts. So if you think of the home like a big mechanical machinery, right? You've got your plumbing, you've got your electrical, you've got your roof doing a job. All these hard things are doing jobs within the home. And if the things in the home are not working properly, the home inspector will note those in a report and gives you the opportunity to say, this house is not for me. Gosh, there's $60,000 worth of stuff that has to be done. They haven't touched it since 1975. Or, you know, it's a brand new home, but it's got this little drip under the sink. Maybe we could fix that beforehand. So the home inspector is a real necessary part of the process. It depends on the square footage of the home. The smaller the square footage, the less amount of money you pay. So it ranges from $200 to up to $1,000, depending on the price or the square footage of the home. So once you pay the home inspector and you get your report, you take it back to your realtor and you decide what you'll go back and ask the seller for, if anything. A lot of times in this market, the home inspections are being waived. You can discuss that with your real estate agent. I know I would never waive one. I would want to always do a home inspection so you know what you're getting. Closing the transaction. So obviously WACO Title would love to have your business, and we'll talk with you about that at the closing table. But right now, Dixie, can I get you to come up and talk about all things lending?
I'm Dixie Cosper. I'm with Bancorpsouth. We're soon switching over to Cadence. We bought Cadence Bank, so you're going to be seeing that name in Northwest Arkansas. I absolutely love what I do. I'm the community development lender, so my job is to get really involved with Community Reinvestment Act, which is part of what we do, and just to do things like this, to teach classes. My love is first-time home buyers. I absolutely love working with my first-time home buyers. I've been in banking for years, and with Bancorpsouth going on 3 years, and I love it too. I actually have a couple of my customers here, so I'm so thrilled to see them and meet them face to face. I have a handout here, and you guys all have this in front of you with a pen, so to the right, you can take notes as we go. And if you want to save questions till the end, I'll answer anything you need, and we'll get going. What I'm going to cover is the 4 keys to home ownership. And the first one, if you turn to, I think mine is page 3, but it says the 4 keys to home ownership. Do you have that page? Got it? There you go. Income and employment. What we like to see in mortgage lending is 2 years of work history. And that can be the same job. You could work one job. Let's say you work at Mercy for 1 year, and then you go to Northwest Arkansas Health for the 2nd year. That's 2 years. It just has to be a consecutive 24 months job history. The same job is even better, but you know, nowadays it doesn't always work that way. So just remember 2 years job history. Self-employed borrowers, 2 years income tax filed. It's a must, and that's how we determine your income off of that. Yes? Was it a fly? I waved it earlier. She's sitting over there going. I have had situations with the 2 years of work history, college students just getting out of college. We can use a student transcript showing that you were in school for 2 years and now you've landed your dream job, what your degree is in for. You can qualify for a home. So that's an option too. I don't know if anybody's in that situation, but we can look at case by case. Every loan file is completely different. And so it's our job as lenders to determine, put all the information together from the application and determine, you know, what you're going to qualify for. And what we don't like to see, multiple job changes. COVID, when it hit in 2020, really put a wrench into everything. It was like the world stopped, as we all know. And Freddie Mac and Fannie Mae, which are the 2 big companies over mortgage, they kind of determine the rules and guidelines. And that really put a halt to things to where all of a sudden we're seeing these huge gaps of employment. So what they told us to do was get a letter of explanation to show that, yes, you're going to go back to work. Because of COVID, you had to miss 6 months. Well, see, that's still in our 2-year history. But with a letter of explanation, there are ways to get around that too. So don't let that stop you also from applying or thinking that you don't qualify for a home. And I am going to cover this just so if any of you are wondering what your debt to income ratio is. And when you are getting into the home buying process, and I mean, I could spend a whole day on the different loan types we offer, and it can get very confusing. But as a lender, it's our job to get your application, to process it, put your application on our system, and then come up with recommendations for you. What loan program would work good for you, depending on your income, debt to income ratio. But I've included a formula for you in case you're wondering, how do I figure out what my debt to income ratio is? And this is something you can just do at home without even doing an application, because I'm going to tell you where you need to be. If you take your gross income, and that's before taxes, insurance, any of that, your gross. So just like I'm annual salary. So I take my annual salary divided by 12, that's my gross. Base is after insurance and taxes and everything. We do everything with gross income. And then you're going to take your monthly house payment and any credit cards, car payments you have and add them up. divide it by your income, your gross, and that's going to give you a ratio. That ratio needs to be, I mean, if you could be 30%, that's awesome, but I'm not even 30%. Keep this in mind, 40% and under. 40% and under is an awesome ratio to be at. 30 is even better. You have more availability of different loan types available to you. And when you start getting in the 50s, about the only loan I've ever seen go with that high of a ratio is a FHA loan. And they will go down to a 589 credit score too. So their guidelines are a little bit more lightweight on that. But to me, that's too high of a ratio. You want to be at 40% and under, and I was just talking to Tiffany about that too. And keep this formula handy so that you can use it at home. Yes?
What's included in that? Like
The debt to income ratio?
utilities?
No, don't include your utilities. You include, let's say right now, use your rent. So if you pay rent, use your rent, any credit card payments, and it's the minimum credit card payment, not the balance, car payment, that type of credit. Student loans, include that monthly payment. That's part of your debt to income ratio. We don't take into account water, gas, electric, any of that when you buy a home. Yeah, so just keep in mind things you owe credit on. You know, credit cards is a big one.
What about phone bills?
No, we don't count that either. Like your everyday living expenses, we don't take that into account for your debt to income ratio. But debt to income ratio plays a huge part of what you're going to qualify for. And it's just so that people don't get in over their heads. Like they were mentioning earlier, you don't want to be house poor. You want to sleep at night. You know, you don't want to worry about how am I going to make this mortgage, and it's our job to make sure we don't put you in a $2,500 a month mortgage when you can only afford $1,000. It's just not going to be approved. So, but I like this formula because then it just kind of gives you an idea of how we figure it, and just kind of remember 40% and under. Yes?
Okay, like I'm in grad school, and as long as I'm in grad school, my loan doesn't have to have a payment. So is that still considered in there?
We have to count it. Depending on what loan type, we have to count, like if you were to go with one loan type, it's 0.5% of the outstanding balance of student loans that we have to count. Other loan types, 1%. The great thing is though, if you get income-based repayment, which is called IBR for student loans, we can go with that payment, which is usually lower than 0.5% and 1%. And right now, that's a very good question because everybody's in forbearance right now. And I think they extended it to May. They were talking on the news last night. And May comes, they'll extend it again. So we're going on 2 years of forbearance before long. We still have to count that against you because what that says is, unless you've been completely forgiven of the loans, and which is a process in itself, and you got that documentation from the student loan company, we have to count that payment against you if you have student loan debt. Just because that debt is going to come due, and even if it's a year down the road or whatever, we have to count that against you. Just maybe not as much, but if you can get income-based repayment, that's the way to go because I can count that low payment because it's already set in stone. You have to apply for that, and then the next year you have to apply again, but it's a wonderful program. I wish they'd forgive them all forever. Yes?
Could you talk about how you calculate like the 0.5% or the 1% of the student loan, like just so they can figure out?
Sure.
What that
Take your student loan, $10,000, 0.5% of that, $50. 1%, $100. That's all it is. It's a really easy formula. Is that it?
Yeah.
That good? Okay. Next, we're going to talk about the second key to home ownership is credit history and score. And I'm not sure what page of yours. My key doesn't follow you guys to the page. But if you'll go to key number 2. Income is the most important. Credit history and your credit score is just as important. It's how we figure this is there are 3 scores when you get a mortgage. When we pull your credit, we get one from TransUnion, Equifax, and Experian. Those are the 3 major credit bureaus. And so it combines all those together, and you're going to have a high score, a low score, and a middle score. We always go. Every lender goes with the middle score, no matter what. It's called a hard pull. We're going to know everything. When we do a hard pull, what we see is your credit score, your name, any other names you've had, social security number, any other social security number showing up. It's almost like it's a background check report because that tells a big story for every individual. And by going by that middle score, that determines what kind of loan you're going to qualify for, what kind of interest rate you're going to get, and loan type. So it plays a big part. I can do loans as low as $589, and that is one particular loan type, which also allows us to have back to the debt to income ratio, which was over 50%, 589 score, and I got an approve eligible. And what I mean by approve eligible is when I put a loan package together, an application, I run desktop underwriter, and what that is like a quick answer. It's a quick yes, it's a quick no. And by putting the income, pulling the credit, bringing the whole picture together, the last step I do is run it through the bank's desktop underwriting program. And I've gotten a 589 approved and over 50% debt to income ratio. It's rare, but it happened, and it was good job history and all of that. Only one loan type they had to choose from, which is your FHA loan, which is an awesome product. Nowadays, with the market being so crazy, as the realtor could probably tell us, is they want to see conventional or cash. So it's hard to get an FHA accepted right now that we've been experiencing this last year with the home market being crazy. From your credit report, it also lets us know if you have derogatory credit. That could be late pays, liens. I've seen tax liens, student loan liens, and it tells me the credit company that's reporting. It tells me if you pay on time. It tells me if you're late. And we just pull all of that together. So if I could say anything and teach anything, protect your credit like it's an infant. That credit, unfortunately, makes life easier if it's a good credit report and a solid credit report. We do have agencies, though, if you need help cleaning up your credit report, that can be done. If anybody wants information on that, I'll give you some information afterwards. Just take me aside. But credit is very, very important. Probably more important than income, but they are kind of neck and neck when it comes to that. Anybody have questions on credit report? They had mentioned you can go and get a free credit report every year. I highly recommend it. With the fraud that goes on in the world right now, that's where it's going to show up. And if they're sending everything to a different address, you're never going to see it. So get that free credit report every year. Just remember that it probably will ding you. And when I say ding you, because we do a hard credit pull from all 3 bureaus, it could lower your score. But it's not going to be that much if you're not going out and applying for a car and all these credit cards and stuff. You'll save 10% if you apply today. Don't do that. Don't get 10, 15 credit cards. That's going to kill you. And then it's going to hurt your chances of becoming a homeowner. Anybody have questions on credit?
Why do sellers not like FHA?
I don't know.
I mean, does it take longer for them to close?
I think in their mind, they think we have to go over a 30-day close. Everything I do is a 30-day close, unless it's a refi, finance on a current property you own, then it's 45 days. They just don't like to see it. Can you explain that more?
Well, I think, it may be misrepresented to people too, but in a lot of cases, other lenders I talk to, sometimes it does take 45 days. So that's just an extra amount of days.
2 weeks. Yeah.
But also, it's just from what I've heard from other lenders as well, in a lot of cases, there's hurdles that you may have to jump through with FHA when you don't have to do that with a cash buyer.
Oh, cash is king.
Conventional loan.
Yeah, yeah.
But if it's not like a cash or conventional, in most cases, you're gonna have to jump some hurdles anyway. So,
Right, and I think,
FHA.
yeah, I love the FHA product. The interest rate is low, the down payment is low. I know that the inspections are a little bit tougher. There's guidelines that have to be, you know, done for the FHA loan, but it is a great product. But in the last year, we've just seen that if it's on our pre-qualification letters, if it's not conventional, and of course we don't see cash offers, they just don't want to see it. But it's also, what, 30 offers per home in the last year. It's just the craziest market I've ever seen, and probably you've ever seen in the last year.
You know, I will say too, like if it is an FHA, more than likely that person doesn't have a cash flow or cash in their pocket to pay above appraisal, which as if someone with commission
Yes.
loan or cash loan,
Yes.
they usually have the cash to pay a bit extra. And we're seeing all the way up to $30,000 on average over asking price for purchase price.
Mm-hmm.
Not always, but in a lot of cases.
Yeah, and that's unheard of. I've never bought a house in my life. I've owned many homes. And in the last year, and you can vouch for me, you're offering $100,000 for this house. They're offering $125,000, and they're willing to pay the difference. So if that house appraises for $100,000, you're willing to pay $125,000 and come up with $25,000 extra out of your pocket to pay for that. That's something that's been a turn that I've never seen in my life. Well, my first home I owned in '94, so it's been many, many years. I don't like to see my first-time home buyers get into that situation. It's something that I talk about at the beginning and educate, that if you have to overpay, maybe it's not the home for you. Like Melony was saying, if you make an offer and it's meant to be, it will happen. So, any questions? I think we're going to move on to key 3. Assets for down payment. When you buy a house, a lot of people forget that there are costs involved, and that is your down payment. And I'll very briefly go over them. FHA loans require a 3.5% down payment. How you figure that is you take the purchase price times 3.5%, that equals your down payment. So you're going to have your down payment, but then there's closing costs involved. Closing costs are your prepaid taxes, property taxes, homeowners insurance cost, administrative fees, title fees, all of that adds up. And I would say roughly what I average on seeing is $3,500 to $4,000 in closing costs. So something, again, it is case by case. Every loan is different, but I always like to go a little high rather than be surprised and you don't have enough in the end. But a lot of people forget that you've got to have, we call it skin in the game. You've got to have that down payment and you've got to have your money put aside for closing costs. So I recommend for people, don't spend, save. Save as much as you can. Now, sometimes when you're putting an offer on a home, you can ask the seller to cover your closing costs. Or, but I want a fence, will you pay my closing costs? Will you split closing costs? They're probably gonna say no. So that's why I encourage everyone to save. We also have down payment assistance programs, which is something I'm not gonna go heavy into because it's case by case, it's income based, property, there's so many details to that. But if that's something you're interested in, I've left my business cards up with Tenisha. Call me. Even if you don't use me, let me help you. I can answer questions. There's people that call me who just have questions and maybe aren't ready to do an application, aren't ready to do a loan, but that's what I'm for, is to be here to help you, especially because it's so much to know. We also, if you're buying a home and can get gift funds, has to be from a relative. It can be, they just passed where it can be a cousin, which I always thought, I don't know, that just seems silly to me, family's family. But it has to be, your gift funds have to be from a relative. And gifts are not to be repaid. It cannot be repaid. You're taking that gift from them. We see them a lot, and it goes to help towards your closing costs and down payment. So that's an option too. We will ask for 2 months bank statements. So something to watch with your bank statements is we audit those. We don't like to see large deposits. Absolutely, I can't stress this enough. Cash and mortgage do not mix. No cash deposits. We'll find them. The underwriters will find them. If we can't source it, and when I say source, I mean we have to follow that paper trail from beginning to end. And if we can't make sense of it and can't source it, we can't use it. So let's say you have $5,000 in your account, you have a $3,000 cash deposit. We have to take that $3,000 out and can't use it. So now we're minus $3,000. I'm surprised at how many people do have cash just sitting in their house. And we just cringe. That's just like words we don't want to hear because we know we're going to have to back it out of the asset balance.
Why is that?
Can't source it.
So, I mean,
There's no way to track it. Where'd it come from? Did you borrow it from somebody to get this loan? That means you can't afford it. Did you, if it can't be sourced, and that's just banking, I think, in general. If it can't be sourced, we can't use it. And I'll tell you where a problem's coming in now is Venmo and Zelly. We're having issues with those where I think they're going to have to rewrite guidelines over it because the IRS is. The IRS, they said on the news the other night, if you have over $600 a year Venmo deposits, which is considered cash, you have to claim it. Claim it as income. Did anybody else see that? Okay, on bank statements, I see a lot of Venmo and Zelly deposits. And it has to be a letter of explanation and make sure that you're not taking money from them on an outstanding loan you have somewhere. That's the big thinking there. Yes?
Isn't it just though for the months immediately preceding the purchase? Because if you, January, February, March, say you're mowing lawns or maybe shoveling snow here, I guess, and then you've gotten those deposits or maybe however you run your household, you pick up an odd job or you babysit somebody's kids just for cash or you braid somebody's hair or do something. Aren't you just specifically tracking dollars for those couple of months preceding the purchase? So
2 months.
So for the 2 months.
Yes.
So prior to that, you're really okay.
Yeah.
So don't be afraid to deposit your money. You know you're planning ahead so that you're prepared when it's time so that you can take care of these things. It's not that, I've had this money, I've been piggy banking it or putting it in a mason jar in my backyard. But no, you can put it in the bank and be safe, but just
2 months.
You're planning out in enough time.
And it's called seasoning the money, but we don't like that. We don't like to talk about it. We don't like to give that guidance, but because you did, we'll say, listen to her. But yes.
Money at home that I have been saving.
Put it in the bank.
But it's not thousands, it's just.
Doesn't, well, if it goes toward, keep this in mind. If it goes towards a down payment or closing costs, get it in the bank. At least 2 months. We have to have 2 months current statements. That's all we ask. I prefer verification of deposits, and my assistant orders those because then it doesn't matter. However, verification of deposit, I'm going to go back. I put $10,000 cash in the bank. I'm going to say $9,000 because I don't want to do a CTR. I put $9,000 cash in the bank, and my assistant does a verification of deposit. All of a sudden, my balance went from $500 a month to $9,000. That's not going to fly. You just got to make sure that money's been in the bank for 2 to 3 months. 3 months is better, 2 minimum. And then they call it a seasoning process. But like I said, I'm surprised how many people do keep cash. And it's not in a jar, it's in a home safe or something. And they're like, well, we'll say, where did this deposit come from? Because I put the loan together. After I'm done putting the loan together, we've locked the rate, we've signed disclosures, I send it to my assistant. I have a processor. And then she audits it, and she's gonna go down and we need to know what this is. And then that's when I come to you and say, okay, I need a copy of this deposit. If it comes back that it's just a teller ticket, that's cash, we don't want to have that situation. So just, if you're in the process of buying and you've got cash, just get it in the bank. It's no big deal. Yes, Gwen?
I recently bought a house.
Yes.
The lender was looking over my last few bank statements, and my girls, they're adults now, but when they were younger and we opened banking accounts for them, they're tied with my bank account.
Right.
So we frequently will exchange money back and forth. Like my daughter, who has a family, her husband changed jobs, money will run tight, so I'll spot her some money for a little bit. So I'm frequently transferring money back and forth.
Yeah.
And the lender was like, wait, what is all this? And so I just had to explain it, but that's something that you don't think about.
Yeah.
But
It's something I do with my grown children. One's still in college, so we have that same situation. But if I was to buy a home, I'm not going to give them that account. Like, I have 3 or 4 checkings. I have a savings. Everybody usually nowadays has multiple accounts. We only want the account where your closing costs and down payments coming from. We don't need stocks, bonds, 401k. We don't want that. We're just very focused on the assets where the transaction's coming from. So were you using those accounts for the down payment and closing costs?
No.
I'm just curious.
She saw that, like, I would send money
Yes.
to my daughter, and then my daughter would pay me back.
Gotcha.
So she sees these transactions for cash going in and out, and she's like, what is this?
Yeah, so see, they did catch it, and they will catch it. And our underwriters are like, they are like the most powerful auditors you've ever seen in the world. And if we don't catch it, guarantee you they'll catch everything. And nothing gets by them. But like I said earlier, the new Venmo has really been causing issues with us because that's considered cash. And I've seen a lot of Venmo deposits where normally you'll see payroll deposits or maybe smaller deposits. And what they're looking for is larger deposits. If it's 50% of what you make and under, they really don't care about that. They're looking for larger than that. So if it's $100, $200, that's not a big deal. And I mean, I don't have large deposits in my account, but on my account, I just have payroll. So it's real simple. But now we're into another, into a new world with all the Venmo and stuff. I actually just opened one up myself. I feel pretty proud of myself for getting a Venmo account because my daughter in college needs money, and it's just easier to Venmo her. And that's what we're looking for now. But if it's $50 to $100, it's okay. Like I said, I prefer a verification of deposit because we don't need anything. If you've had your money in there for over 2 months, it's just going to give us an average balance. That's it. Date opened, average balance. That's the best way to go. And so just kind of keep that in the back of your mind. If you've been sitting on any cash thinking, well, I'm going to save this and not spend it, just put it in your bank at least 2 months before we close. And I think that kind of follows what you were saying too. Yes?
What is considered a cash deposit? Is it cash or like if someone writes you a check? Is that considered cash?
No, that can be traced. That's sourcing. Because it's paper check, paper trail, that's sourcing. Venmo is just Venmo. It's cash. That is a cash transaction. Because Venmo, you have to have available funds. It's like a wire transfer. So it's available funds, it's cash. Venmo, Zelle, all those cash apps are cash because it's not going to let you do it unless you have the cash. But there's absolutely no way to source it. It's, they're going to come up with a way, it's just not there yet. But I've seen where it's created issues, and it's really hard as lenders for us to source it, let alone our assistants, because can't get any tangible paper in our hands to see where it's coming from. And where it gets sticky is, I Venmo you $500. Now I need your statements to show that $500. So then it starts getting, it can just go down a rabbit hole of getting all these statements from everybody involved in the transaction. So it's best just to avoid it at all costs. And like I said, we only need the account where the money's coming from. It doesn't matter if you have 10 accounts. We don't need all that. So focus on one account for your assets, if possible. And remember, we can do gift money, and I mean, there's all kinds of ways. So if you're almost there and you're saving, don't give up. Call me if you want me to run numbers. I can do that for anybody. Any questions? And thank you for your input on that too. That was very good. And then we're going to go to the closing cost section. I wasn't going to cover this, but we have the time. So is it okay if I spend a few minutes on this? Okay, I already mentioned it earlier, but your closing costs, this is the stuff that's going to be in that. And property taxes are a major one, and they're very expensive. But as lenders, we have to collect so many months in advance to go towards your closing cost. Almost everything has to be prepaid 1 year. That's correct, Melony? Excuse me, I'm on TV. I feel like, you know, I was telling them earlier I always wanted to be a star. I think this is it. Take this, put it on TikTok, and I want to see how many hits I get. Or how many people are going to go to sleep. Don't you feel that the closing costs, your prepaid taxes, your home insurance, we collect a year in advance? Yeah, I just wanted to confirm that with you. And then we have an administration fee. On this handout it says loan origination fee. We do not call it that. We call it an administration fee. And Bancorpsouth is $9.95, and that's collected up front. It's part of that cost. We've got your title policy, tax stamps. It just adds up. And if I was to do an estimate for you, you find a price you want. And if I did an estimate, it is line by line by line by line of exactly what those costs are going to be. And they do add up. And I would say $4,000, just depending on the price of the home, what the property taxes are. And I'm going to cover homeowners insurance. Homeowners insurance is about the only thing you can shop for other than your home and your lender. You can go anywhere. We just have to have the loan amount covered with your homeowners insurance, but a good homeowners insurance agent is going to give you enough coverage so that if something happened, you're going to have a replacement value. And I think we have someone here today that's going to talk about homeowners insurance. Perfect. And so she'll go more into that. But that is something on the lending side you can shop for. It's, you know, and then we just have to have the agent's name and phone number, and we will get your deck page from them. And it's called the declaration page, which tells us how much it's going to cost, what the coverage is, and all that fun stuff. But that's also, we have to collect 12 months in advance. Yes?
So when is that collected?
At closing. It's part of the cost. Okay. And I'll do an estimate for you and send it, and you'll see it line by line by line by line. And it's right in there, homeowners insurance, 12 months at. And there will be a total. And if you follow it from A to Z on an estimate, it just goes line by line and adds it. And then this section will be added up. And then it will tell you at the bottom your total costs, how much you need to save and come to closing with. Any questions on fees? Melony and Katey covered some of that. Is there anything you want me to cover in addition? You guys touch base on that, on title fees and closing fees, and did I miss anything that you wanted me to talk about? I just didn't want to repeat it. Does anybody want to take a break? When's our break? Oh, page 15. Melony is like my boss. Tonight when I go to sleep, her and I have been talking, organizing, planning this, and all of us have actually. This committee is fabulous. So all we've talked about is on page 15, page 15. So we get up here, what page? We're on page 10. Okay, the next key that I'm going to cover is the house qualifications for the loan. This is extremely important, and Melony touched a little bit on this as far as your inspection and stuff. We're going to order an appraisal on every home. The only time you might see an appraisal waiver is if you're doing a refinance. And a lot of times we'll get an appraisal waiver because we've already got the loan. But when you're purchasing a home, you have to have that in appraisal. An appraisal determines the value of the home. It does not determine the condition of the home. They are two separate things. It gets confusing. But when you get an appraisal, they are a licensed professional that will go out, take the measurements into consideration, how many bedrooms, how many baths, how old the home, everything. And then they're going to give the bank a value on that home. I just lost my train of thought, what I was going to say about that. Comps. Does anybody know what a comp is? A comparable sell? Comps. With an appraisal, the appraiser is usually going to get 4 homes within a 2-mile radius, hopefully closer in your neighborhood, and they're going to see price per square foot of what that home sold for. That is a huge determining factor when they give us a value on this appraisal. I would say in the last 2 years, appraisals have been coming in higher than normal, which is very good. New construction, I would say, is spot on with the sale price, but comps are extremely important. You and I live side by side. Our houses are so similar. You're listing yours for $350. I listed mine for $3. Those are not comparable sales. So they might come in somewhere in the $325 range or something like that. But in my neighborhood, we're listing our house in April, and we're building a home. And we've been watching our neighborhood really closely because we have had we have one closing this month, and I can look up tax records so I can see what they're selling per square foot. And we're going to list ours, what they sold theirs for, because that is just spot on good comps for us to sell our home, which ended up being more than what we thought we were going to ask in the beginning. And is there any questions on that? I know it can get kind of confusing. Inspection. Like Melony said, she highly, 100% recommends everybody getting an inspection. We don't recommend that. That's between you and your realtor. We actually don't like to see inspection reports. We just want the appraisal and the value. But I will not buy a home without an inspection. When we build our new home, I'm still going to have an inspection because stuff gets missed. And so they're extremely important to you as buyers. But it doesn't determine the value. It determines the condition of the home. And I just had, for an example, I had one come back. It was an FHA loan I'm doing. We're closing this month. And they wanted little things, just to elaborate on what Melony was saying. It was like the crawl space door needed a new hinge. There was some rotted wood around the door, just replace that and paint it. So I haven't seen anything that's been like extremely major. It's all fixable. And a lot of times what I've experienced is the seller will fix that. And you have, just ask for it. Here's the inspection report. They'll do an inspection repair addendum. And you'll list with your realtor, this is where they play such an important role to protect you, how to present that to the seller to ask for that stuff to be fixed. But usually it's small stuff. So I haven't experienced anything that's super big. Any questions? We're not on page 15 yet, so don't get excited about your break. Now, we have all different kinds of home loan products, but what I'm going to talk about today is something I specialize in. I'm very proud of this product. I was hired to represent this product as well as all loan products, but this one is the one that I wish they would have had when I was a first-time home buyer. The restrictions are a little bit heavier than other loans, but if you can make this loan happen, it's a way to get into a home with little down and 100% financing, which usually doesn't happen. It's called my Right at Home Loan Program, and it is considered a conventional product. Our bank offers it. It's our product. We own it. No other banks offer it. But you can get into it with $500 down. The cost to you is going to be your closing costs and what we call prepaids, which I've already covered that. We do 100% financing. So the house is $150,000. We will finance $150,000. Your skin in the game for the down payment is $500 of your own money. It can't be borrowed or anything. What I love about it too, which I did not talk about because it can get complicated, is mortgage insurance. Does anybody know what primary mortgage insurance is? It's called PMI. On a normal loan, if you do not put 20% down, which is an 80% loan to value, you will pay primary mortgage insurance. Of course, my first, second, third home, I paid that because I didn't have 20% down. But it is an added cost, and it is determined off your credit score, debt to income ratio. And primary mortgage insurance protects the bank. It protects the lender. It's not an insurance for you, it's for us. And the more you put down, the better off you are, the more skin you have in the game. If you're at 20%, you don't have to worry about mortgage insurance. But the right at home loan that I'm talking about, there is no mortgage insurance, even with putting just $500 down. You do have to have a 640 credit score, and your debt to income ratio cannot be over 40%. So there are some criteria that you have to meet for this particular loan. But if anybody's interested, call me and I can give you more details. Then of course the other products we offer, conventional loan is 5% down of the purchase price. And you can go down to a 620 credit score on that one. And FHA, I love that product because a lot of people do that product. I've had FHA loans myself. I love FHA loans. It just helps people have a smaller down payment. So you can get into a home for 3.5% down, and I've went down to a 589 credit score. So every product, every person's different, every scenario is different. It just depends on what your picture looks like, and then it's my job to come up with recommendations or help you and help answer questions. Any questions on loan products? Has anybody been watching the interest rates? Yes.
I do have a question.
Yeah, absolutely.
So your income determines how much of a loan you can get, but it doesn't determine the type of loan product you can get, or does your
They kind of go together. You're looking at your credit score, your income, and your debt to income ratio. Those factors coming together, and with an application tells us the whole picture. Being able to pull credit tells us the whole picture. That determines what you can qualify for.
as far as the different loan products?
Yes, credit score especially on the loan products. And how much money you have for down payment. So credit score, down payment. That determines the loan products, those two big factors.
Is there any amount of income that would max you out of a loan product?
Yes, the one I'm talking about right now.
So
It's income-based or it's location-based. So if you gross $56,200 a year and under, that's the income right there. That's 80% of the, we call it MSA, it's low to moderate income, and they set forth that income determination for us, and it's 80% of that. Now, it may go up this year. Last year was $56,200. If the property is located in a low to moderate income census tract, which, I mean, I've had brand new subdivisions. It depends on where the county determines those property lines. You can make any amount of money, doesn't matter. So the particular, this loan product, it can be income-based or property location-based. Conventional, doesn't matter. You know, it's credit score, income, debt to income ratio. So every program has its in and outs, but I don't want to just product dump because then it's just like blah, blah, blah. But call me if you have questions. Email me, text me. I work 7 days a week. So no question's a bad question either, but it's just part of learning and how understanding. Another good loan product, which I'm not going to go into great detail, is a rural development loan, also known as an RD loan. If any of you have heard of that, that's where the property's located. In a rural development area, you can do 100% financing on that product too. So there's all kinds of products out there. It's just that the basics are conventional, FHA. I mean, but we do VA too, so I mean, the list goes on and on. So if you have a particular question, I think, Tenisha, didn't you also have that program where they can ask questions, right? And then do I email them back, or how does that work?
We can work collaboratively to...
And that way, if you guys don't feel comfortable, she has a program you can ask questions, and I'll reach out to you and answer them for you. But I really feel there is a product for everyone, depending on your situation.
I have a question.
Yes.
Is home loan products
Yes.
Can you explain the difference between the sales price and the loan amount?
Sales price, I'm selling my house for $200,000. You're buying it for $200,000, but you have to put a down payment. So the sales price is $200,000. The loan amount is minus the down payment.
Okay, this is sale price of $80,000, and all of these loan amounts are over $100,000. On the slide.
That doesn't make sense. Who printed that? Can I look at it? 'Cause my key is different than yours. Okay, and then down here, this is great. Shows your down payment. You're going across this way? Go down.
No, so it says the sale price is $80,000, and all these loan amounts for each type of loan are over $100,000.
This is
that's what I don't
wrong.
understand.
That's incorrect. Go by this. This is your loan amount, down payment.
Right, but why is the loan amount $116,000 when the
No,
it says
this is,
sale
what I'm
price?
saying is I don't think that's correct right there.
Okay.
I don't even know why that says 80,000. Yeah, this is the sales price of each loan type. So if you see 80,000 in the upper left-hand corner in your key, these numbers are not based on that, and I didn't even catch it, to be honest. Yeah, that's just printed incorrectly. Don't go by that.
Okay.
Because I'm not going to buy an $80,000 home and spend $116,000 on it.
Right.
So make sure you cross that off. And then if you have questions on that and you want to know, because it's just your sales price, $200,000, normal 5% down. After you take 5% off, then it's that's your purchase or your loan amount after that. Does that make sense? And I would love well, actually, I have copies of that because I'm sorry. And the closing costs on that too are a little bit high. I should take that page out. Next, we're going to go to the time frame. I close my loans 30 days, sometimes less if it's conventional, and their income's easy to verify, assets are easy to verify. But normally we say 30 days, refinance 45 days, and that's every loan type. The faster you get your information to your lender, which they'll give you a needs items list, the sooner we'll get everything to underwriting. We like to have the loan prep for underwriting after 2 weeks, and then in underwriting it usually takes about a week, and then it goes directly to closing. So just keep in mind 30 days, and I think is that what did the realtor leave?
Yeah, it is about
30, is that what you're seeing too?
I will say this, it depends on the load of the title company.
Yep.
So if we get the loan package from the lender, if we get the order from the real estate agent to go over title, it depends on our backup. I think we were at 3 to 4 days during the title, so it takes time for the examiners to look up the title.
And I get your application, I process it right away. I work from home, so you know my schedule. I'll hop on the computer at night, whatever. It takes me about a day to process the application or less, depending on the file. And then I'll reach out to you, we'll go over it together, go over your credit report together, determine the product you want by looking at income and assets and putting the picture together. And then from there, normally you're pre-qualified before you even start looking for a home, and I think that's pretty much a requirement nowadays. They want to know that you've started the process, especially on the seller side. So if you're looking or you have something in mind, make sure you get pre-qualified. Pre-qualification is not a pre-approval. Pre-qualification means you've started the process, you are not approved for the loan, but with all the information you've given us at application, we are pre-qualifying you for this loan amount, this price of a home. It's really confusing, but when I came to Bancorpsouth, they said never say pre-approved, always say pre-qualified. Approved means you think you're approved. It's been to underwriting. Well, no, that's way down on the timeline. Pre-qualified means that from what you've given us, it's a go, but depending on once we start verifying income, assets, everything, time on job, this could change. And that's just a little bit of the difference, but that could just be my bank too. I worked for Simmons Bank for many, many years, and I think they said pre-approved. So everybody's different. That's just what I can do and what I can say. And so from application to closing, we're looking at probably an average of 30 days. Depending on, like Melony said, I've seen where everybody's backlogged or just coming out of the holidays. That was a real hard date to make that 30 days. Appraisers are swamped at times, and that can slow it up. And so it just depends, but I think 30 days is a good average. Any questions?
Okay, y'all, I am about to stimulate you with some exciting stuff called title insurance. All right, so like I said, I had no idea what title insurance was until I started working for a title company, and I'm on my 4th house. So it's not something you really learn about during this whole, a lot of people don't ever learn about. So, all right, so basically title insurance is a policy that protects your investments and your property rights. And there's 2 different types of title insurance. So there's an owner's policy, and that's purchased by you. And while it's your choice whether or not to buy one, definitely highly recommend it, not just because I work for a title company, but it's like an appraisal or like an inspection. It's really comparable to an inspection. It tells you if everything's okay, and if not, what could be potentially wrong. And you don't want to buy a house without the inspection, because what if everything looks fine and dandy, and then they go into your crawl space and you're like, you have a family of raccoons under here that have eaten all the wires and your house is about to blow. You just need to know through an inspection, and the title insurance is basically an inspection of whether or not the property is good and clear to go to you, or if the person selling you this property even owns it. What if it's the neighbor trying to get rid of the property or something? So it protects you. A lender's policy is usually paid for by you or the seller, and it protects the lender and protects only the lender's interest. But both of those usually are in conjunction. So, are you stimulated? Are you excited?
I'm stimulated.
You have a question?
What happens and how do you fix it if a title report comes back with a problem? And what if it's something that's not any nefarious? It's not the neighbor trying to do something. Maybe, a grandma passed away and it was given to a grandchild, and somehow the title work didn't get done properly.
All right.
Do you want me to answer that?
So that is actually Melony's next section that she's going to cover. So great question. We're about to answer it for you.
Okay, let me start here. Buying a home, if you consider the amount of money that goes into it, who would agree with it's the single largest financial investment you'll probably ever make? Right. For everybody in this room, that is probably very true. Maybe for some other people it's not. But to protect that investment, you want to make sure that the property can be conveyed to you cleanly and clearly. So we're going to talk about what happens when there's dirty title in just a second. So I want to give you an overview of WACO title. The title plant, which is what we call HQ, which is over in Springdale. If you're ever on 49 and you pass like the exit where the Walmart neighborhood market is and you keep going and it says WACO title, it's that big glass building on the right before you get to the 412 exit. That's us. Next time wave, Katey and I are in that building most of the time. When you go into the building, what you'll see is admins on the left, the title people on the right, and the examiners in the back. So when a title order comes in, and for us an order means a contract that has been signed by all parties, the lenders approve the transaction, we call it an order instead of a contract. They've ordered us to research that title and make sure that it's clean and it can be conveyed from the seller to the buyer in a way that will not cause problems for the buyer going forward, or a lawsuit for the seller because XYZ was on the title. The title examiners in the back are very quiet people, like library type people. They don't want to be bothered. They're researching very important stuff. If you go back there, you have to use your quiet library voice. What they're doing is very important because they're looking at the name on the contract. If the name on the contract is Bob Smith, they pull their hair out because there's a million Bob Smiths. So the real estate agent is the one in charge of making sure it says Robert L. Smith Jr. III. See where I'm going with this? The title examiner makes sure the seller is who the seller is. Make sure that it's not the neighbor that's come over because the seller's out of town and the neighbor's trying to sell the house, because that's happened before, many times. They also make sure that the buyer is who the buyer says that they are. The title examiner will look for unpaid liens on the property. The seller back in 1984 hired a plumbing company to come and plumb the house. Didn't pay the plumber. Plumber put a mechanic's lien on the house. Guess what? That's a dirty title. We can't sell the house like that, so the proceeds from the sale will have to go to pay the plumber first. That's a lien, that's a mechanic's lien. So another thing that might be discovered is unpaid child support. You can't get away from that. You got to pay it, whether you're the buyer or the seller. If it comes back that that's owed, it's going to come out of the proceeds. Taxes. Anybody not pay their taxes?
Okay.
If you haven't, you just probably don't need to be here. They will catch you, and you have to pay those taxes. You can't go, well, on the next house, or I'll get you in a year. They want it right then at the closing table, just right prior to. Another thing that they might be looking for is legal fees that were unpaid, where they've put another lien on it. Is the property in foreclosure? Because if it's in foreclosure, there's this balance. It's like a teeter-totter, this balance of a timeline where you can sell it right up to foreclosure, but then there's a date and stamp where you can't, it's too late, the bank's got it, you're too late. So while the examiners are looking for all this information, they compile it, they stack it all up, and then they give it to the processor. The processor then works to process the file and cure all the problems. The processors are kind of like our little nurses. They're working to go, okay, there is actually a mortgage currently on the property. They owe $50,000 still. So before you can sell it, you have to pay off that previous mortgage, right? So the processor works to cure that. She gets in touch with the mortgage lender where the current loan is and says, hey, we're ready to pay this off. What's your payoff value? They get that taken care of. She gets with maybe the plumber who has the lien and says, okay, we're gonna pay you off and here's what's going on. So she cures all the things that are wrong with the property, the defects, what we call them. After everything has been ducks in a row, everything's ready to go, the processor gives it to the closer. The closer is the person that's talking to your insurance person, your lender, to make sure all her ducks in a row and everybody's gonna get their money on time. And the closer is the one that when you come to WACO title to close, the closer meets you. Sometimes the lender comes, sometimes not. Since COVID, probably not. Face to face at the table, and you will sign a huge stack of documents that basically promise the lender, if you give me this money, I promise to pay you back. And you have to sign 400 ways, right? Yes. So that's kind of the process. Does that sort of answer your question about the dirty, how we cure that? So it's not your responsibility to go out and track down the problem and to fix it. And so we have had some come through that we can't close. We're not able to do that. We did have a situation last year where a guy got a house under contract. We were able to determine there's actually no driveway. There's nothing. They actually had inadvertently, the neighbors all landlocked him out. He was going to have to get an easement in place, and there wasn't an easement in place. And so the buyer chose to back out of that contract because he couldn't access the land where he wanted to build the house. So that's something the seller's going to have to work with. And just as a side note on that, the seller that was selling this property did not get, he paid cash for the property, and he did not get title insurance. So he didn't know there was a defect. And so it went back several generations because they'd owned it all this time, and they just built around the property. So now he's actually in a lawsuit with the title company that originally closed it because they didn't find the defect, which wasn't WACO. Anyway, okay, so WACO title, what we do, this part of the transaction is basically protect your property. So think of title insurance like a property force field. We make sure that not only you get the property and you're able to, it conveys to you correctly, but then there's this force field of protection. And so for as long as you own the property, you are covered. Nothing else can happen after you own the property that's not covered. We cover things that happen in the past. So when you think of health insurance and you pay that every month, you're banking on and hoping on that you don't get sick in the future. With title insurance, it's backwards. You pay it today and hope nothing has happened for like 30 years back. Does that make sense? Does anybody have questions?
Divorce is another one that can mess a closing up.
Divorce will really mess a closing up.
The spouse won't sign off the lien, and there goes the whole deal.
Mm-hmm.
I've had that happen.
Yeah, we've had tears in closing rooms.
Yeah.
I've had to separate people.
Yeah.
Come on, with your box of tissue to this other room. But yes, we're equipped to handle all kinds of snafus, and we do it daily, and we just have to go home and laugh about it and sometimes just cheer people on.
And we'd be lost without title companies.
Yeah, we do love to partner with lenders. It's very important that the lender, the title company, and the realtor work very close together. Without that triangle of trust, is what we call it, you can't really have a great transaction. All parties have to work well together.
It's like the circle of trust.
It's like the circle of trust, but it's a triangle.
I want to be in there.
You do want to be in the triangle of trust. You do. And I will say, too, that title is one of the most important. Oh, I'm sorry. And the insurance person wants to be a square. I'm sorry.
I want to be in the square.
You want to be in the square? Okay, we'll make it a circle, and then everybody can be. Sorry. That's just, okay. But we have to include, if we're going to include you, we'll include the home inspector, the appraiser. There's so many people that go into it. Sorry, I always use that. The thing I will say is that the title insurance is the least amount of money during the transaction. So if you're buying a house that's $200,000 in Washington County, if you split the title fees between the seller and the buyer, which is coincidentally B on the sales contract, if they mark B under title, if you split that, it is approximately $1,040. I looked that up. If it's a $300,000 house, it's about $1,100, and that's a one-time fee for the rest of the time you own the home. So cheap compared to what you get.
Absolutely.
So hello, y'all. I'm Regina. I go by Gina, Shadowens. I'm with Farmers. We are sometimes the very end, as you can tell, when it comes to the whole buying, closing, everything. I'm like the last person. I'll get a document, and they'll say, oh, by the way, we need this. We're closing in 3 days. I'm like, it's midnight, and I'm sending over so that way the close goes through, and it's accurate. Or the close kind of messes up, then they send it back, and then we'll redo it again. So I'm that very last person. I'm going to give you a little back history. I was a hygienist here in this area for 30 years, married, 2 kids, all the fun stuff. My husband passed away. We had a cabinet shop. We had a flooring company. We had convenience store. We had all this fun stuff. And then he passed away, and I got to have the 2 little ones, plus all that, plus hygiene. And I was like, okay, I can't do this anymore. So I thought, what can I do for me? I have done everything. And I decided, you know what? I still want to help people, kind of like I worked with patients. And patients, when I worked with them, you know, they go, oh, I'm going to get my teeth cleaned. And they go, okay, so that's a 30-minute appointment, whatever. And then you find out all these problems. The same as with insurance. People are like, oh, I just need to get some insurance put on my house. No biggie. And then I get to be the one that helps them, just like Melody was saying, you go through, hold their hand, because you have to explain all the different types and what they need and versus what they want. So I went into insurance because I wanted to be that one-on-one with a customer, to be that person that they can go, it's midnight, and they're like, my whole living room is flooded. What do I do? And I'm the person that goes, you know what? Let me get a hold of my people. They're going to be over there first thing in the morning, right then maybe, whenever they're, because when we had that ice storm last year, if y'all remember, I was nonstop on the phone 24/7 because roofs were caving in, pipes were bursting, and it affected pretty much everybody in Northwest Arkansas. So they were like, they're going to be a week out, and it was, everybody was a week out. Kind of like the COVID stuff, everybody's kind of, you're put on hold. But I wanted to make sure I was able to help the person one-on-one versus being that call center to where you're going, oh, I'm on hold for 30 minutes, an hour, and then they say, oh, by the way, this is what it is. Thank you. So I'm got my own agency. You call me or the people in my office if you need me. Phone number's on the card. You text me 24/7. So I'm there. Like I said, I'm with farmers, and farmers, people think, okay, we are farmers, home, auto, whatever. We also do, we sing that to our customers actually when someone comes on board, or when I'm quoting them. But, and I have a button that sings it too. You push it. As far as farmers, they own MetLife. So you hear the MetLife insurance. They own companies, so say you're doing, and that's medical, but you're buying a house. And you go, okay, they're so expensive for this. We've got multiple companies that we can go through to try to find that need that you have to fit you. So, some of those commercials are out there saying, oh, we'll do it so it's your price. But sometimes price is not everything. Sometimes it's that quality. It's just like the insurance, you're saying, get the title insurance. Why? Because we're gonna be there to take care of you down the road if something does happen. Just like that she was saying, because I work with the customers, I work with the realtors, I work with the finance companies. It's whoever is there that's going to have that need. One of the things that people, and I'm just going to go over what insurance does cover real quick. We are an HO5 company. You go, what is an HO5? That means we are a replacement company. You look at some companies, they're considered an HO3. Sometimes you need an HO3. Like a landlord. So someone's renting, they own that property, they might just want an HO3. What does that mean? They're going to do a depreciation. You know how you get a car and you go off the car lot? That is a depreciation the minute you drive off of it. It was $10,000, now it's $5,000, and you take the hit when you try to resell it. The same can happen when it comes to insurance. So say your house burnt down and the roof is 10 years old, and they go, you know what? To put a new roof on, it's going to cost $15,000 to $20,000. But with an HO3, they're going to look at it and go, you know what? It's 10 years old. We're going to give you $5,000. And that's how it works. Replacement, HO5s, we look at everything and go, you know what? You have that stereo on the wall, with the TV on the wall. We are going to let you go buy it at Walmart. We're going to replace it at today's cost. So that's a big difference when you're replacing your home because it was in a fire, which I've had customers go through, or it flooded, and you have your flood insurance, or it could be the tornado that came through Rogers and Cave Springs, and it came through, and people were calling going, my roof's gone, my walls are gone, my stuff's gone. And you know that the one that just happened. And I thought, that whole night I was like, okay, how many insurance agents are there helping? Does the farmers, we have a big truck that just went to Joplin, and it goes, okay, here we go, here's a check, here's a check, here's a check. We don't do all the stuff that most insurance companies do. We have also, when you say replacement, we have what's called an extended replacement. And that's what she had talked about as far as some of the things they look at. So your house gets wiped out, it's $200,000. Okay, we'll write you a check for that $200,000. It's a check. We don't come in and itemize everything. We give you a check. Then there's an extra little bit that's down there, and that can be, a lot of times people use it for the cleanup because you've seen the storms on TV. Someone has to come in and clean all that up. Well, we give you a percentage, usually it's about 25% up to another 100% to come back and replace or remove to replace the home that is now gone. But say it's also one of those things where you look at it and you go, oh, my pipe broke underneath the slab. Most HO3s will cover the dig up, they'll cover the pipe being taken care of, but what they don't replace is the slab. So now you've got an extra expense that you weren't aware of, so we come back and put a new slab down. Even when a tornado hits or a fire hits, that's wiped out, but then we come back and actually replace the slab. A lot of companies don't do that. They don't tell you that, but they don't do that either, so that's why they don't tell you. The difference with me also, I made you known, like I told you, I'm not a call center. So I'm gonna be there on any reason. So then if one of them call me and say, hey, this is going on, we need an extended replacement. We need it to be of this amount, or it needs to fit in with this. We can go in and change, because we have so many options, numbers, and fit it to you. So if your house is 200,000, we can bring it to 200. But say you decide, oh, wait a minute, you know, we're gonna re-look at that, and your appraisal comes in and it's $150 a square foot, because now things are going to 200 to 210. We do not look at the land either. That's a thing you need to know. So when you're looking at an insurance company, there are insurance companies out there that if you're buying that house for $200,000, they're gonna go, oh, on Zillow it says 200. Well, the insurance policy is 200. The thing is, you don't wanna be overinsured. We can't insure land. Land is land is land. So the home is the only thing that can be insured. So when they go to write that check, they're that HO3, and they said, oh, we gave you 200,000, but we're gonna come back and depreciate it back because we can't cover the land. So that's where we will come in and look at what is the square footage. We will come to your home. We will look at, take pictures. We look at the roof. We look at anything and everything that's on the outside, but we can also look at everything on the inside and take pictures so we have that documented. So if a fire does hit, we can say, you know what, they had 3 iPads, they had 2 home computers, they had that big screen TV, stereo, they have luxurious flooring. We can do that, so then there is no problems. I had a friend that was here in Springdale, got robbed, son left his wallet at U of A, laying down while he was playing ping pong, and it's kind of funny because their son-in-law was a Springdale police officer. Farmers came in and said, okay, what happened? And they said, well, we were robbed and they broke in, they had a security system, they had everything. Nothing was on and the door was unlocked. The guys came in, took it. Yeah, people were like, yeah, we saw them kind of go in, but we didn't think much of it, neighbors. And ended up taking pretty much, I mean, her grandparents, grandmother's rings, wedding bands, cash. She's a teacher, Springdale, took her school computer. I mean, everything, just wiped anything and everything they could put in the pillowcases, took off her pillowcase and put everything in it. Farmers turned around and wrote her a check for $10,000 plus, even waived the deductible, because you do have deductibles when it comes to all this kind of. So that's why when you start looking at insurance, it's just not about the amount. You go, oh, well, they said it's only another $50 a month in your house payment, because you don't pay us either up front. So like there is zero cost. So when you come in, say I gave you number, I get your number, I get your information, I run a quick quote, takes about 5 minutes, and I say, okay, your house is going to be $1,200 a year in coverage, and it has all this coverage. The mortgagee, which is your finance company, is going to be the one that pays that payment. They in turn put it in on, and you will see it on the closing cost, that goes into your monthly payment with your taxes. So then that way you have it coming out monthly, but you don't see it. And so it is still good. Also, what we do in our office is called a FFR, a Farmers Friendly Review. So once a year we go through, what if your home price increased? Because just like this last year, I mean, it went from, we used to be $100 a square foot around here. Now we might be 200, depending on the home. We will look at that and say, you know what, we need to up the coverages. Because if you had that fire, then you're not going to have enough insurance. The other thing we have to look at is liability. How does that liability, someone's on your property, that is one thing that they will also talk to you about when they are going and writing it in. If you don't necessarily talk to me, you might talk to your finance company. They say, we've got your insurance. Liability is something that, say someone's on your property, you hear this all the time, you're having a yard sale and they trip and fall, hit their head, and then they go, I'm gonna sue you for $100,000. Do you have that coverage to take care of that? And then there's also even things like, which is really crazy, but you can be in a car accident. This has happened. I know 2 or 3 right now that are happening. Luckily not my customers, but they had a car accident. Car hit the motorcycle. The first thing the motorcycle did was, you know what? Let me have your insurance card. Okay. He was on the phone with his attorney at the crash site. And he was already, before they left, knew all of everything. Within 24 hours, these attorneys can have everything that you have in credit. Meaning credit like, I've got credit in my home, so I've got extra equity. Because that home that you paid for now went from that $100 square foot to $125 square foot. So you've got that extra $25 a square foot. Okay, well that's $100,000 now. They can go, you know what? They've got $100,000 there. They've got a 401k. They work at this place. And within 24 hours, he had every information so he could go and put a lien on the home because he didn't have enough car insurance. And then that puts a lien on the home. So you have to watch your liabilities. You know, do you have just $100,000? Do you have a $500,000? Do you have $1 million? So that's the things when you're looking at insurance as far as which way we want to go with it. Is there any questions?
Is insurance coverage automatically reassessed as the house appreciates, or is that something that
Both.
has to be done?
This last year, insurance companies across the board, because of how much the property went up, they will automatically sometimes just put it through. And then we, as the agent, we go back through and we look at what the square, before it goes to the customer, I will actually look at it and go, because I get a notice, okay, how much are they paying? Do they need more? Do they need less? But that's why we do the review every year, so that we can go over how much is your insurance. Are you adequately covered? So.
Is this a yearly thing or is it monthly?
It's yearly is what homes are covered. So it's unlike your autos, which usually is a monthly, you will pay it in full. Now, say your home's paid for, you can pay it monthly. Like I have retired customers and they go, you know what? I make this amount, so I only want to pay it monthly. And that's fine too. It's however you decide you want to do it. So anyway, and then mortgage protection, I was just going to let you know, that's what those applications are for. And that's also, so if something happens to you, that the house does not fall somehow on your children or someone else. So you have that, and then the bank is going, hey, wait a minute, you owe me this amount. That's what those applications are for.
So my name is Tenisha Gist, and I'm with Partners for Better Housing. I am the Stewardship Manager, and essentially I am the person who can assist you in looking for a home in our development called Willow Bend. We are building 81 homes, and we have a program called Pay It Forward. And so that program specifically helps you to, one, if you are qualified, then you would be under 80% area median income. And essentially all you have to do is complete an inquiry form, and I will assess it, and then we will sit down and discuss next steps. But essentially what we try to do is help you get into a home. So the program is a shared equity home ownership program that essentially allows you to receive community investment dollars to help get you into the home. And when you decide to sell the home, essentially you will pass those savings along to the next buyer. And so I have my information that I can share with you, that if you have any questions or if you're wanting to learn more about Willow Bend, we're actually located in Southeast Fayetteville on, if you go where the Fayetteville Adult Education Center is, we're not too far from there. We're not too far from Walker Park. East 10th Street will be a good indicator of where we are, and you can go through and see some of the houses. We're still in the process of developing, and so in the next 2 or 3 years, those homes will be complete. So if you are interested in whether you're a market rate buyer or if you're someone who's like, well, I'm not, maybe qualified or under 80% area median income, that's okay. We have homes, and I will be there to help walk you through the process. If you are saying, oh, I need a lender, maybe you're not ready to purchase now, but you just want to work on your credit, or maybe you need to save more money, I can be there to help you and connect you to experts, to down payment assistance programs, and just local resources to get you ready for that next step when you are ready to purchase a home. So as we close out, I want to thank all of our presenters for presenting today. You guys were phenomenal. I will make sure to follow up with you in an email to give you all the information for contact. So if you have additional questions or that you weren't able to ask today, you can continue to ask. We will be free and able to answer any of those questions and there to cheer you along the way. As you know, this is one of many of the community-wide training series, so you can still go back and register for the future ones. If you've already expressed that you want to receive notification through email or text message, we will follow up with you whatever method you express that you preferred. So what we'll do is I have some surveys that I'd like to pass out to you. Just let us know how we did, and appreciate you all for coming. Is there any additional questions or comments? Okay, I want to thank your media, and you guys be safe. Thank you.